guys. Welcome back to another week of Mortgage Matters in Minutes. I'm Brett Rasmussen, owner of Mortgage Specialist. So, today's title is a topic that's been talked about over the last few weeks after the Fed meeting here today. So, might be recorded for some of you, but some of you that are watching us live on Facebook and Instagram, it's very timely because people have been waiting for this day to happen for many years, which is for the Fed to start cutting the Fed fund rate. So we have seen mortgage rates be the best that they have been in all of 2024. And actually, many of our clients have been calling now after the Fed cutting rates, thinking mortgage rates have dropped a full 0.5%, just as the Fed announced their cut. But the Fed fund rate is a short term effect of interest rates, not a long term effect. So it doesn't directly impact mortgage rates, but the mortgage markets know generally or predict generally what the Fed is going to do. So you will see mortgage rates drop 2 or 3 weeks before the Fed meets. The Fed is supposed to continue to drop rates throughout the year, which is great to see that hopefully will cause mortgage rates to follow suit and continue to come down. But it's going to be a rocky road as we figure out what the economy is doing and how unemployment is continuing and how inflation is impacting the economy, things of that nature. So don't always just rely on the news media and stories and articles to give you what mortgage rates are. Feel free to connect. And we here at Mortgage Specialists follow along with our clients and track their loans to say, okay, here is probably the time to start looking at that. But why do low rates matter? It makes a huge difference. We're seeing interest rates now a full percent to 1.5% less than they were a month or two ago. It causes more home affordability. It causes obviously less payments and saving and interest. And really, people now are finally wanting to refinance again. They want the cheaper payment. Why wouldn't you? The negative here for some people is they want to see more of a drop and they're waiting to time it absolutely perfectly because in the past we've seen some of the all-time lowest rates ever recorded. We don't anticipate that happening. So if you see something you like, take it now. You can always adjust things later, and there's never going to be a perfect time to get the perfect day to get the perfect lowest rate of all times. It's not possible. Just like buying stock, buying bonds, mutual funds, going to the store to get groceries or gas, you're never going to time it absolutely perfect. But one thing people don't realize when it comes to interest rates, not everybody gets the same interest rate, even if you have perfect credit. Whether you have 5% equity, 10% equity, 20% equity, or 40% equity could cause different interest rates depending on FHA loans or conventional or VA. But most of the time, people think as long as I have 20% equity, I get the best rate. Not all true. If you have 40% equity, you do get the best interest rate. So you can see with different clients, it makes sense at different times to take advantage of the interest rates. Also, it's going to take a little bit of time for the consumer to find out that rates have dropped. And we'll see a large uptake again of pre approvals and people out purchasing homes again. People wanting to move again because it's much more affordable to purchase a house at a 6% rate than it is at an 8% rate, for example. Also, between lenders, we can shop around your loan, and we here at Mortgage Specialists have multiple avenues of sources of lenders to go through. So we can shop around your loan in the market to see who is providing the best rate that day. Again, we chatted before that all types of loans and all kinds of credit scores and all kinds of equity has different interest rates. So it's not easy to say, hey, I heard someone got a 6% rate or a 5% rate or a 7% rate. We have to look at every situation different because there's different pricing. And that's the way the mortgage market has always worked, is plugging in an actual application to see the true credit score and the true loan to value to know what that particular interest rate is. I know many people still are talking about and questioning, should I take an adjustable rate out? Maybe it's time, maybe it's not, but these are the conversations that you want to have for you and your financial future to consider what is the best option. And talking to a professional that's been around through the ups and the downs of the markets, like I have, to show you and tell you, explain to you what has transpired. And we've seen throughout history over and over and over before the Fed cuts rates, mortgage rates come down. It's always been the case. They don't come down as soon as the Fed cuts a rate. We haven't seen much change at all in interest rates since the Fed has cut. So there's a lot of miseducation out there that's getting passed on from people that don't all know how the mortgage backed security market works and what has actually happened. So, lastly, what do we anticipate for the future of rates? We do anticipate the Fed is just like everybody is announcing, and just like they announced that they anticipate them to cut a couple more times this year and a little bit throughout the year next year. Will that happen? It all depends. So, waiting around for a rainy day to see if rates continue might not always be the best. You might want to take advantage of something now if it's good and it's good for the numbers and it makes sense. Your break even on a refinance makes sense, or getting pre approved now makes sense. We can run the numbers, and there's never an easy way to predict what's going to happen in the future with all kinds of markets. We can go into another world war. We could go into a massive recession. We could not go into recession. And a lot of times people throw politics into it. Is there a lot of things that can change because whether a Republican or a Democrat gets elected in the election? Yes, no, maybe. All of this is speculation. Most of us can do the best we can to give you the facts, which is we know the answer here today of what's going on and what the rate is. Do we like it mathematically or do we not? And I can share with you, we've quoted a lot of refinances, and most people are still hesitant to pull the trigger as they want to see things lower. And that just makes human emotional sense that you want something even better, even though you got something great that's happening. So stay tuned, stick around, get pre approved, contact us for refinancing. And we would love to kind of run numbers. And if it doesn't make sense today, that's totally fine. We can put you on the map and say, hey, let's wait till rates get here, here, and here. And we can track the rates for you to make sure that you're getting the best deal you possibly can. Feel free to reach out to us anytime at 402-991-5153 or check us out on our website at mtg-specialist.com. I'm Brent Rasmussen, owner of Mortgage Specialists. We'll see you here next time. Mortgage Specialists. Driven, trusted, reliable.